Hey, good evening and welcome back to Second Comma Strategies. Today we're going to take a deep dive into the Vanguard Industrials ETF, ticker symbol VIS, Victor India Sierra, VIS, the Vanguard Industrials ETF. Before we go too far, let's take a real quick look at the disclaimer. You can always pause it if you like, or you can fast forward if you don't want to listen to me for the 1,000th time. The information presented here is for educational and informational purposes only. I'm a software developer and MBA. I'm working on my doctorate in business and finance. And at the same time, I'm not a licensed financial professional. Nothing in this presentation should be interpreted as financial advice, legal advice, tax advice, or other. All investment carries risk, and everyone should do their own research prior to making any investment. All right, let's get into it. So VIS, at a high level. The Vanguard Industrials ETF is an exchange-traded fund. It's based on the MSCI US IMI 2550s Industrials Index. Did you get all of that? Probably not. So essentially, it's a market cap weighted index of US industrial stocks. It was launched back in September of 2004, and it was issued by Vanguard. So it has had a fair amount of time in the market and a pretty good pedigree coming from Vanguard. Morningstar actually gives it a bronze rating. We'll see that it has approximately or almost 8 billion under management, 7.81 billion, and an expense ratio of 0.09. That means for every $10,000 invested, you'd be paying on $9. Let's see, PE ratio of 28.49, and it does have a dividend yield of 0.86. All right, let's go ahead and take a look at the holdings here. And when we take a look at these, what you're going to see is a lot of names that you do actually recognize. Essentially what we're talking about here are the companies that build and maintain the physical infrastructure of the United States economy. These are the engines that keep the supply chain moving. The top 10 in this portfolio makes up about 28%. Caterpillar, GE, Aerospace and Vernova, RTX, Boeing, we see the Eaton Corporation, Honeywell, Union Pacific, John Deere, Uber, Vertiv, Lockheed Martin, Quanta, Parker Hannifin, Howmet Aerospace, Trane Technologies, FedEx, Cummins, ADP, and Waste Management. And as a side note, I'm sure everyone here already knows this, but in the FedEx logo between the E and the X, there's a little arrow there, so you know they keep it moving. All right, let's move on to the part that people tend to care about a little bit when they're looking or evaluating the stock, and that's the performance metrics. I have here charts of the year to date, the last 5 year, and a breakdown versus the S&P 500. One thing to note about industrials, or like any sector ETFs, is they do have their own specific rhythms and timings. So understanding those trends can be a factor in knowing when to allocate your own capital. What I'd say here is, taking a look at the bottom here, we can see that VIS has kept a very admirable pace with the S&P 500, finishing mostly second for the majority of the time ranges, but with some points of outperformance, including year to date. It's up almost 3 points, a little bit more than 3 points. And then on the 3-year chart, it actually edged it out there by a bit. But we see as we look back longer over the 5-year and the 10-year view, or the S&P 500 does tend to edge that. Alrighty, let's have a look at some of the dividends here. So looking at the dividend overview here, we do see that we have a current yield of 0.86% a share. That equates to $3.04 or $3.0396 per year. And I will note the 3-year compound annual growth rate of 9.18%. This did earn a stock unlocked dividend score of 3.8 out of 5. And as far as our own dividends, we do have dividend payouts in March, June, September, and December. And at our current allocation, which is about 20 shares, we're looking at $15.20 per quarter. So we'll be looking for that soon. All right, before we get out of here, the last thing I'll get into my investment rationale. And I do want to call out, this is my personal investment rationale, meaning the reason why I invested my money into VIS at this time. Alrighty, so one of the main things that I'm looking to do in my portfolio was bring in a little bit of de-risking. As you see here, the VIS or VGT is about 30% of my portfolio. And if we look at information technology, the holding is about 40%. And then if we were to look down, semiconductors is probably something that could be classified in the information technology or at least adjacent space. So a good percentage of mine is in technology, and I'm fine with that for the most part, but a little diversity doesn't tend to hurt anyone. So that's kind of the first thing that I'm looking at. The next thing is a deliberate position on cyclicality. I have been navigating the industrial sector's nature and cyclical nature. And I think that the AI advancements currently are kind of bolstering that. So I think that as far as times to get in, for me, this is an opportune time. I do believe that we have some additional secular tailwinds. I'm looking at the US-centric growth drivers. The reshoring of manufacturing is one of the call-outs that kind of drives me towards this. And then finally, a return to the tangibles. I believe that companies that have physical assets, tangible things, are going to have sort of a renaissance. So we're looking at a resurgence there. All right, guys. So that pretty much wraps up my rationale for VIS, the Vanguard Industrials ETF. I hope you enjoyed it. Thank you so much for your time. One quick call out, a lot of the graphics that were used here were from Stock Unlock. This is free promotion. I don't get anything for this. I don't have a promo code. I just use the tool. So I thought I'd go ahead and mention it to you guys. All right, and very last thing, if you've made it this far, go ahead and just drop a like on the video. I'm a new creator, so every bit helps. I really do appreciate it. Thank you again, and I hope you enjoy your day.